The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning from Hong Kong, China, where it's nighttime here. Just turned 9 o'clock at night. We'll take a look here at the, thank you for the compliment on the gold, Danny. It's just the charts, buddy. Had nothing to do with me. The first chart we're going to look at here is the NASDAQ. Let's try it again, Larry. It's the DAX. You see that beautiful 3 drive to a bottom pattern yesterday. And if you really want to enjoy it, do the work yourself and measure the time between each of the lows, and you'll see the beautiful symmetry coming in, and the last one coming in at a 1.27 expansion. That's a really great pattern. Now the next one we want to look at, of course, is the FTSE. Of course, we had the butterfly pattern there yesterday, the bottom down there at 68.50, and we've had a pretty good rally, well over 150 points in the FTSE. But this is a much more bearish chart than the DAX, as you folks well know. Now I want to take a little trip through Hong Kong today, folks, just to show you, some parts of the city. A lot of you guys don't get to travel a whole lot, but the first one I'm going to show you here is this is an aerial view of Hong Kong Park. I want to get this. This is the equivalent of Central Park in New York, but let me get it up here. Remember, New York has about 9 million people, and Hong Kong has about 8 million people. But Hong Kong has a lot more land because there's a whole lot of land outside of Hong Kong. But this is in a park that is just absolutely incredible. And we were invited by one of the foreign consulates today to have lunch there, and it was really spectacular. I wanted to show you 2 things that I think you would like to see, and one of them is this beautiful fountain, which was right outside of the restaurant we were having lunch at today. I wanted to show it to you because it's really, if you ever get to Hong Kong, you have to go here and see this place. It's really spectacular, right in the middle of all these giant buildings and everything. And then finally, I wanted to show one of the pictures from our seminar that we had, and I'll bring it up here. You'll be able to see me there with my sombrero and my guitar entertaining the folks. This is actually in the Hong Kong Park, folks. Those are barrel cactuses right out of Tucson, and I don't know who that. I think that's Pepe Delgado. Yeah, that is Pepe playing. Oh, he's singing Jimmy Buffett's Margaritaville. Anyway, believe it or not, that's right in the Hong Kong Park. So it was quite cool and a lot of fun. Weather here was really nice, about 72 degrees. And it was pretty nice. Okay, now let's move on to a couple things that really need to take attention. Danny was talking about the gold. The only reason that I'm sharing that is because I know a lot of you folks don't get to travel, for a lot of different reasons. And some of the things we see are really kind of neat. Some of them aren't, but that is one of the nicer things. By the way, Marshall, when you come out to visit us in a week, Kelly won't be able to join us. He's in a nursing home now, and he's not going to be moving around much, but he's still alert and doing okay. But he won't be going to Guadalajara with us this time, but we'll still have a great time. Okay, let's move on here and take a look at some of these things. The gold is very interesting, folks, because we've been waiting for this to happen. We had that big ABCD pattern that was completing. We wanted to bring this up to you folks to show you this is one of the things that we focused in the newsletter over the weekend. Yes, we do, Danny. You're always welcome. Anyway, we got up to that 1356. We've broken $16. That's right at the half harmonic number. So the gold should hold here at 1340. If we get much below it, we're probably going to have a bigger break. So if you did that sale on that, Our first objective on that came in around 1341, so you'd want to at least book part of the profits, or at least move your stop down so you're not going to lose anything. That's the main thing that you want to keep doing. This is all about how much you don't lose, not how much you make, because you're going to have a lot of losing trades along the road, and you're going to have a lot of winning trades along the road, and you're going to have to manage your risk, because that's where the success lies, in managing the risk. Folks, we've got a really big pattern here happening in the market. Let me bring this up to you. This comes from one of our friends over just east of Istanbul, and I want to bring this up and show you. I believe, hold on a second. Do you have time for $2? I don't. Do that. Be a little more specific, Sunshine, because I don't understand what you're trying to tell me here. But this is the Dow Jones Industrial Average E-mini. As you can see, we made a 61% retracement last night. Folks, that is the first clear ABCD pattern we had since that market topped back on the 26th of January. And Mr. Gartley said on page 222 of his book, is you want to sell the first ABCD rally in a bear market and buy the first ABCD rally in a bull market. And this is our first ABCD rally in a bear market. And if we take if you'll notice, that's a 61% retracement from the high on the 21st. If you go back, way back to where the high was made, you'll notice that would be right at a 50% retracement of that. So it's going to be very interesting what happens today. Remember, folks, that markets that go straight up have a tendency to go straight down. The other thing is the news that they have. I mean, it's reported on Bloomberg and both CNBC this morning that this was the best day the market has had since 2015. Folks, do the work yourself. Go back to look at February 6th to see what happened. I mean, it wasn't even comparable. But that's how they report it. So I guess they massage the figures to make them realize that they fit the area what you're going to do. Yes, I will be in that area. Pedro, I will be there, but sometime between the 8th and 11th, that's for sure. If you're in that area, let me know. I'll be happy to meet you, and we'll see what's going on. David's asked me a question on any of the rule of alternation. I don't know if I know that. I've forgotten it, David. All I know is that the markets repeat over and over again. If you mean by alternation that they expand and contract, which they do, and they do it with pretty good regularity. But I don't remember what. I have a vague memory of that, but it's something that I don't use. I basically keep it as simple as possible. I go back and look to see if the market's repeating over and over again, and that's really all I'm looking at. And the main thing I start with, of course, is the ABCD pattern. There's a general tendency pattern too. Okay, that is correct. It is good, but you see, I don't do Elliott wave, and the reason why it's too confusing for my tiny little brain. And it's much easier for me just to see the swings as they unfold. And the one thing I do remember is Elliott did not know 1.27, and he never used it, so he didn't know the square roots of the numbers. So he only had part of the Elliott wave problem, and that's the way I see it from Hong Kong, China. We'll be right back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I wanted to expand on that Elliott wave stuff a little bit. I posted the Euro chart that we were looking at this weekend in the newsletter 24/7 just to get an idea of what we were expecting to see this breakout occur that we did get in the Euro. And what I'd like to do now is just to expand it. This is a 4-hour chart. You can see that after we broke out, we went right up to the 78% level, and then we've come down and touched that line. That's basically a 20-minute line that's been so far, the low of the day, which is nothing more than a 50% retracement of the low of the 22nd, and it's also a 78% retracement of the low yesterday. The point that I'm trying to make is, I know the Elliott wave people have a way of counting these waves, and my mentor, John Hill, this was back in 1970 when John was first showing the Elliott wave, and this was 6 years before Prechter started his newsletter. And John told me, he said, you really don't have to be, really complex. If you just look for the ABCD patterns for expansions and contractions, that's going to tell you where you are, because that's what you're going to have to risk. Because if you're selling at the 78% level, you have to decide how much risk are you going to take at that point. A perfect example of that is the gold market, because we had a beautiful ABCD pattern up there at 1355, and if we use an $8 stop in gold in a contract that's worth $135,000, that's certainly a very low risk trade, and it's already made 1,700 off the first, and it could be a major top up here. We don't know for a fact, but it's got the possibility of doing that. Remember, we've talked about the situation in silver that is still going on to this day. Let's just bring it up and show you that even though gold was going up to 1356 last night, well, actually late in the afternoon, the silver couldn't even budge. I mean, this is not a good sign, and we were seeing the same thing happening in platinum. So that's what we're looking at here. First of all, I want to mention something that happened at lunch today that I think we all should know, and the folks there are, they're pretty tied into what's going on in the world. Do you know that there is, when people are, begging for money in China, that they don't ask for cash anymore? They have their own cell phones, and all they want you to do is to touch their phone so that you can donate money right from your phone to their phone. I didn't believe it, but these folks are not the joking kind, and they all said yes, that was going on. It was also happening in other countries, such as India. So cash is out in China, so I don't know what that's going to mean. They use 3 ways to pay: Alipay, which is part of Alibaba, and then they use WeChat dollars. I don't know who owns that. It's probably the Snapchat or whatever it is, and then the other one is PayMe. Those are the 3 ways that that they're looking at it. So that's really important. The fact that these major countries are not. Actually, Danny, the phones over there, they're so doggone cheap that you can't believe it. I mean, this has been going on for, oh my gosh, ever since cell phones came out. The people, China's the same way, where the average wage is so cheap, but they give these phones away so the people to use them, and then of course they do the advertising and all the other stuff, and now with the apps, that's how they buy things. But the phone costs there are like 1/10 or 1/20 of what we pay here. They don't have any loading charges and screening and streaming or whatever it is. They just basically pay a fee of around $7. I don't even think it's $7 a month, because the monthly salaries are, there's something ridiculous like $100. So it's a very, very small amount in any of these countries where they get the phone. One other big thing that's been happening over the last 24 hours, folks, the 3-month LIBOR rate, the London interbank overnight rate, that's where they set interest rates. That just hit a higher high than 2008. That means there's trouble in River City over there, folks. There's something wrong over there with interest rates spiking like that. And I don't know what it is, but my assumption is it's got to be related to this stock right here, and that is Deutsche Bank. They just gave the former CEO, John Cryan, and I'm sure he is today, the boot, and now this stock is looking very, very ominous. Back in 2008, it traded for 120. We are now down 92% from the high and heading lower. And I want to show you a chart very similar to it that you might remember. It happened to be the largest U.S. bankruptcy in history, also the focus of that movie about the 2008 crash, and that is the stock of Lehman Brothers. It went from 130 to zip. I think it went out at $2 a share is where they finally bought it back at. But I think it even went to bankruptcy. Yeah, it did go to bankruptcy. It was Bear Stearns that went to $3 a share. And but anyway, that's what's going on. But a lot of the people, margin call, that was the name of it. Yes, thank you very much, Pedro. That is exactly what it is. It's a great movie too. And those movies are really good as far as documentaries, because they have the people that are involved in it, to see if they're doing it the correct way. But that was a really good movie, and I believe that was the work of Michael Lewis. Anyway, let's move on to a couple other things here about this LIBOR rate. That is really important. Now, the reason why the Deutsche Bank, the Deutsche Bank situation is so important is this next slide that I've shown here at TFNN, probably a dozen times, because I wanted to bring this chart up to you that shows the systemic risk among the regular banks of the world. You can see all the banks, the major banks of the world right there. And of course, the 6 major banks of the world are all Chinese of the top 10. But you'll notice that the Deutsche Bank is involved in most of this, and to the tune of $72 trillion. Now, they're not on the hook for $72 trillion, but they are on the hook for a couple of trillion. And that's part of the reason, for the stock going down, is my guess, is mismanagement. That's exactly what happened, with Lehman Brothers, and it's also what happened with long-term capital. So there's always that out there. So keep an eye on that stock of of Deutsche Bank. Fortunately, we've got a good friend over in Las Vegas, Nevada, Mr. TB, who alerts me whenever that thing makes a new low, which I'm highly appreciative of, and he keeps me informed of some of the information that he's seeing. That's a big help. That's another advantage of, being here at TFNN. You get some super information from folks and doing the same. You're right, Tucker. General Electric looks the same way. And it's not all the fault of Jeff Elmott, too. This all started way back with Jack Welch, the way he was doing things, and they were getting rid of certain assets that were the highest producing ones, like their capital asset program, a few other things. But you never hear about these things. People still get their bonuses and they move on. And anybody that doesn't have any skin in the game seems to be okay. It's the one that have skin in the game, that gets stuck with the, carrying the proverbial albatross out the door when things get a little bit rocky. So we'll watch it closely here. We got the S&P trading a little bit before the opening here at 26.69. I believe it's a sale anywhere around that 26.73 level because of the ABCD pattern was there. So we'll see what's going on here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a quick look here at this banking index because it really closed badly on Friday. Had a pretty good rally yesterday, but watch this index because it will be affected by the going-ons that we see with Deutsche Bank. Remember, The one thing they can't do to you is they can't hide. They can give you misinformation, and they can lie to you, and they can tell you stories that don't really exist. Whether they call it fake news or not, who knows? But the one thing they can't do is hide. So if prices are going down, there's more sellers. If prices are going up, there's more buyers. By the way, the one thing that I thought was really interesting that Tom O'Brien covered, I'd like to cover it again because it means quite a bit from a technical basis, and that is the story that went on with Facebook. You know that it's in the news everywhere, but yesterday was really a momentous day in Facebook. We hit a volume of almost, over 100 million shares, got down as low as 148 and change. I think it was 148.96, and immediately rallied, $12. The pattern that I'm looking at here in Facebook, we've talked about before, is we had that beautiful ABCD pattern up at the top around the $93. The high was 95.84, and then we came all the way down, to the level we hit yesterday. If that completes that particular move, which I think we're very close to, because if you look at it really closely, at 149 a share, it was spot on to a 1.618 expansion of the move from from late January into early February. And that's one of the reasons, when you see a move like that, usually when it expands, it'll expand by 1.618. That's why I've said several times here at TFNN, we've had a 1600 move point in the Dow within 4 days, and we will do 1.618 of that, without any trouble at all. So you're going to see a day at 2600, minus 2600 in the Dow or greater, sometime between now and November 1st. I don't know when it'll be, but, I actually do. But if I told you, what would have to happen. No, I don't know, and nobody else does either. And I'm just showing you what history has done. That's all. But if we had a move of 1600, you multiply it times 1.618, you come out with 26. So 2600 is probably what you'll be looking at. And that's not that's still a big move. It's 10% from where we are right now, which is, certainly would qualify. If it did it in a day or two, it would certainly be a crash, but it doesn't necessarily have to do that. It could take as long as a month or two to get that. But we will see one particular day, sometime between now and November. I really feel strongly about this, is that we will see a day where it's going to be down, 2600. That's 16 times 1.618 takes you to 2600, and that should be done. And that might be one of the best buying opportunities that we have. So just watch it. I don't know when it's going to happen, but I'm just looking at what history's done this. It's really done everything that you could possibly ask for. So we're starting to trade this morning. We're down a little bit now in the Dow. It's given up quite a bit of its overnight gain, and we'll see what's happening. The crude oil is still in a sales zone. The gold is down at 1342. That's certainly been in the sales zone. We looked at that one at 1355, but we'll see what some of these others look like as we go through. Keep a very close eye, folks, on the Treasury bonds. That's the one that is that's got a lot of downside potential. That market is rallying. I mean, that is a traditional dead cat bounce. Let's just bring this up again because it's that important. I was assuming that we were going to have a pretty big break in stocks, and that we would see a rally up into that 147 level. But looking at the intraday charts and stuff, it looks like it's going to have a hard time getting through that 144.31 level. But this has got long-term bearish implications, as we well know, with price levels down near the high 120s. And it's got a long way to go. And there you can see the 3 drive to a top happened in August of last year, and that was a really beautiful pattern. Perfect ABCD. The market broke down, had a 20-minute line, rallied up to 0.57, didn't quite make the 61% retracement, and then has been, moving lower ever since. So sometimes the patterns work, sometimes they don't, but it's all about risk control anyway, so you don't have to worry about which ones are going to work, because the only thing you can control is your risk, and that's where you should be focusing, all of your efforts on. I tell you, folks, I'm still in a state of shock about the fact that we're going to a cashless society. Because it just, I don't know what we're going to do about playing poker. I guess they're going to play poker off their cell phones. I'm going to be in trouble because my cell phone doesn't do any of those things. It doesn't even take messages. So I guess my poker days are getting pretty close to being over. Who knows? Anyway, I certainly hope not, because I enjoy the game. Let's take a quick look at the Bitcoin here. Get going right here. We'll take a quick look at it. No, it doesn't. As a matter of fact, let's get this chart up here for the Bitcoin. In fact, I mentioned to these folks from the embassy at lunch today if this would be affected by blockchain, and they knew virtually nothing about blockchain or cryptocurrencies. I found that quite startling, as a matter of fact. But what we're doing now is we're making a test of the 78% level. If we get below that 72 level, that is going to be extremely bearish, folks, because that's going to set up that really large ABCD from 20,000 down to 6,000. How much is that? That's 14,000, right? And then it rallied up to 16,000. What happens when you take 16,000 minus 14,000? That takes you to 2,000. And that would be a 90% drop in the stock, or 85% drop in the stock. That would certainly be a busted bubble, but it should hold $2,000 a share if, in fact, we get there. And it's not going to get, well, it could get there overnight, but I don't think it will. But, there's a lot of news on the cryptocurrencies coming out, and none of it is positive, which is to be expected because, it's interfering with some of the banking prospects. And they don't particularly like that, whoever they are. So anyway, watch this stock of Bitcoin at 7,200 because it does have an interesting. One other thing that the folks mentioned today at lunch is that the internet can't go down, even that if it breaks down in certain places, that they have ways of rerouting it. I find that really hard to understand, but I did something I usually don't do, and I just kept my mouth shut and listened, and to hear what was going on. But who knows? We'll see what happens to it. Okay, let's move on here just a little bit. Someone asked me to bring up that chart of the gold when we were looking at it. Let's get it up here to take a quick look at it. You'll see there was the sell up there at 1355, the 1.618 expansion was 1356. The overnight high last night was 1356.80, and we've got down to 1340 so far. So it's moving quickly in the right direction, which many of these patterns that work really help. When we come back from the gray, whoa, time out. Judge's ruling. When we come back from the break, let's take a look at these grain markets and also one of the livestock markets, because we've got some real nice patterns coming up. 877-927-6648.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I posted a chart of Christmas corn. You'll notice the low we made on Monday was a 61% retracement, spot on, and it reversed quite a bit. The market rallied a little bit more, then it's backed off a little bit, but we are in a zone here where we're going to have lots of news come out. First of all, we got the planning intentions report that comes out on the 29th. And I think that's important. But let's take a quick look here. Our good friend Rich Anderson sent this to us to take a look at. It comes from International Agribusiness Group, and it basically shows the planning, what the analyst range was, and how they actually turned out. And you'll notice that sometimes there's a huge difference between what they predict and what happens. And that's what happens with these markets when you especially have weather reports that kind of mess everything up. But right now they look pretty positive for the overall structure for the grains, I believe, coming into this growing season. But we will get this planning's intention report on the 29th. That'll give us a pretty good idea of what the crop is going to be looking at. Now, there's another commodity that's in a really critical level, very, very close in here, that a lot of you folks like to trade, especially Mr. Z. But let's take a look here at the August cows. This is August cattle. You'll notice here that it looks like we're going down to make a triple bottom down from where we made it last June and July. That's down at that 102 level, 102 and change. The 1.618 expansion is 102.60. We could be there by the time I'm finishing this sentence. We're that close. So we are very, very close to a major bottom here in the cattle. We're seeing it in August cattle also, but we're seeing it also in April cattle, but April's coming into delivery, so you get, accentuated moves, and you don't really need that. So look at August cattle, good open interest, and good volume, so that will give you plenty of time. But we should be in a buy zone at that 102.50 level in August cattle, risking no more than 1.5 points, like 1.5 points. So that's your maximum risk when you're trading the corn. So we will have Cy Monley on too. Now tomorrow we're going to have Norm Winsky on, and then next week we're going to have, for sure, 100%, I believe, God willing, Al Larson from Money Tide out of Thornton, Colorado, will talk to us about the lunar cycles that he knows about, and a few other things astrological that I think are always interesting. So let's keep an eye on that. Now, there's a question has arise about the platinum market, why it's lagging badly, and that was, one of the reasons why it looked like this gold move was going to be a a little bit of a, oh, I don't have the platinum chart, shut the front door and raise the rent, doggone it. I thought for sure I had it here somewhere, but evidently I don't. Well, not going to worry about it. Okay, let's move on to the, since I don't have platinum, let's move on to this volatility index because I'm been very bullish this for quite some time. We've had a pretty nice run today, but really yesterday, but really nothing, not even a 382 retracement. We got up to 25, and then we backed off 20%. We're down, to 20 again. I think we're trading around 21 and change. But the fact that it's up there, staying there, given the fact that we had these huge rallies, is telling you that people are taking protection. And if you go back and look at where we were in 2008, we went from 20 folks up to 87. If you get a move like that, that's life-changing. So there's a possibility that we could do that without too much trouble. You see, the largest up move ever seen in one day was, back in January. I believe that was near the end of the month, around the 25th or 6th, where we had that huge move. So these moves are extending, and you've got to be ready for them. So make sure you can control your risk because they are going to be coming down. Yes, you're right, Dudette. The crude oil is in a bearish scenario. We had a pretty good break yesterday. It rallied back. Couldn't make new highs again. That's another reason to think that you're in a situation where you're going to be looking at lower prices in this crude oil complex more than others. I'll tell you, the floors and the roads and stuff here in Hong Kong really need some repairs. So they need to put a couple of bucks in this place to get it back to its sparkling beauty that it always is. But it is one beautiful city. There's no city in the world any more beautiful than Hong Kong at night, because they have a laser show right off the South China Sea, and it's really quite spectacular. Okay, another question someone's asked about, and that is the copper market. Give me 1 second, and I will bring up the copper. I believe now this is what we were looking for. I know we didn't get down to that level, but let me double check. I'm not trading copper, so I don't know what the low has been, and I don't think we dropped 18 cents. I'm almost 100% sure, but give me a second to pull up the copper chart just to see where we are, because if we did, that's going to complete a major pattern. So there we are, and we just hit this. And no, we only got down to 94 is what we got down to. We're trading at 299 right now. I still believe we're heading towards 280. That's what it looks like to me. We've broken major support now, but it's very oversold because we're down 10 days from the high, and that's pretty hard to sell in that area. So I think you watch the intraday moves, because if you get a nice 2 or 3 day bounce, it ought to be a pretty good place to be a seller. So copper does look bearish. In fact, it's only the silver that makes a lot of these things bullish. But boy, it does look bullish. That's the bottom line, and I don't want to fade that. Pay a lot of attention to these Treasury bond, folks. We just got up to a really close level here at this 144.31, and we're hitting 145 right now. So we could easily pop up to that 146.15, 146.30 today. And that would complete that ABCD pattern we've been waiting on for 4.5 weeks. So you wouldn't have to risk more than 4 points on that, but God is the one that's sending the check over, and right now her moped is a little bit slow. But anyway, keep an eye on these bonds. Very, very interesting here, because it's a real critical level from a technical perspective. And believe me, they look at the astrological part of this as closely as I do with the technical part. So it's big over here, so we need to pay close attention to it. Someone's asked me a question that I don't know the answer to, which is, stack that one up because there's rooms full of those. When did bowling get started? I don't know why that. Oh, I know why, because there was a movie was talking about Philadelphia, and they were doing some bowling. I don't actually know when bowling came on. All I know, when I was a very little boy, my father was a very good bowler, and I remember, trying to pick up his bowling ball, and it was one of those big 16-inch puppies, and that's all I remember about that about the bowling. But anyway, let's keep an eye on that. That's another one that's very, very interesting. Okay, someone asked a question about silver. Why is it not following gold? I don't know the answer to that. All I know is it's very unusual that it's not, if silver were leading gold here, I'd be buying gold like no tomorrows. But to me, it looks like it wants to stop in here, and it already has. It's already backed off $17, so that's certainly some kind of a stop. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads-up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks. Well, we're going to take a look here at the Australian dollar two ways. First of all, we're going to look at it on the daily basis. You can see that we are very, very close to another Gartley forming down here at the 76.30 level. We're about 60 pips away on that. But if we take a look at this on the long-term chart, going back to 2012, you'll notice that we've had a really nice ABCD pattern that stopped at the 382 back in September. And here we are into January. We had another run into that area, and it should have broken out to the upside. You'll notice the notation there, 102. That means it went 2% higher than that last swing that we had that ended in September. So and then it backed off immediately. So as long as this can hold above the 70 level, it's got a pretty good chance. Boy, they're fighting tooth and nail, to get the picture taken and all this other stuff. So pay attention to this, because it's got a chance to make a pretty good bottom down here at the 76.30 level over these next few days. And if that happens, you can hop on the van if you're not feeling good and go over and buy yourself a little bit of Australian dollar protection. Anyway, that's what we're seeing. We're seeing the same thing in the Canadian. It's been very bearish. It's been extremely good to us over these past few weeks, and we expect it to stay that way. So let's keep our fingers crossed and see what's going on. All righty, now someone's asked a question about the grain report. Folks, it's going to be issued after the close on Thursday, I believe. I could be wrong on that. Someone will certainly let me know, but we have time because there's going to be a show tomorrow. And reminding that we will have Norm Winkie as our guest tomorrow, which is good because Norm always has some great information for us that we really appreciate. Okay, now one of the questions are coming in pretty good today. Someone's asked a question of whether these stocks will be affected by Facebook. Yeah, but how much, I don't know. That's why the advantage of looking at your own work means a lot. So live every day in an attitude of gratitude, and may God bless, and we'll see you tomorrow.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.